and length of height, yes.
Yes, excellent. That was my guess. You guessed well. Yeah. Process of elimination. It's nice to meet you. It's good to see you. See you. Thank you for coming. Welcome. Pleasure to be here.
So is it a random order on the sofa?
So, good afternoon. Good morning for some of you who are online. My name is Sarah Bell, and I'm the communication officer of the facility. I'm very pleased to welcome you to the launch of a Microinsurance Compendium. And I just have 1 minute introduction. It's just to recap how we structure the event. So after the opening remarks and the keynote speech, we're going to have a series of very short presentation that will cover some of the chapters of a group, some of the chapters of a book. But most importantly, those teasers aim to kick off the discussion that we will have after. We will break that series of presentation with 2 Q&A. And we really want the onliners to participate and to have a chance to interact with our speakers. So we will take mostly the question from the onliners. Then you can see the posters all around the room. So at the end of the plenary, we will break into small group discussion, and you will have a chance to ask your question to our speakers. Okay, something I also need to tell you is that please feel free to mingle around and move from a poster to another one. And I know that Alice wants me to remind you that you can tweet. We have created a hashtag, so if you want to comment online, and you can see also what people are saying about the event. So now let me welcome Mr. Diop, the Executive Director of the Social Protection Sector, who has kindly agreed to make the opening remark of this event. Mr. Diop. Mr. Diop has an extensive experience as a trade union leader and as a government member. He was Minister of Health and Social Welfare and Minister of Labour and Employment for a total of 10 years in his country, in Senegal. Mr. Diop.
Thank you. Thank you so much. Let me tell you that I'm really very happy to be participating in this launch of Protecting the Poor, a Microinsurance Compendium Volume 2, and I congratulate my colleagues who have contributed to this valuable publication. This is a critical topic sitting at the intersection between social protection and financial inclusion, because the working poor live in risky environments vulnerable to numerous perils. And while the working poor are more vulnerable to these risks than the rest of the population, they are the least able to cope with a crisis, when a crisis occurs. Informal risk coping strategies do not stand up well against a series of perils, which unfortunately is a situation often experienced by the poor. Before the household has a chance to fully recover from one crisis, they are stuck by another. The ILO's involvement in this field goes back many years. The early efforts to the Social Security Department in the 90s to find effective means to extend coverage to people in the informal economy were focused primarily on social health insurance. A compendium on health microinsurance was first published by ILO's STEP program, which means Strategy and Tools Against Social Exclusion and Poverty, in the year 2000. At the same time, our colleagues in the social finance program were developing very similar ideas, coming, however, from the direction of microfinance. While the microfinance discourse focused largely on interventions intended to boost incomes, build assets, and create employment, a corresponding effort was required to manage risk and reduce vulnerability. To break the cycle of poverty, investments in production must be accompanied by a similar emphasis on protection. Otherwise, households that are improving their lot in life can easily lose any gains if they experience an illness, a death in the family, or other crisis. In fact, linking microinsurance to microfinance is a way of making microlending more secure, since it overcomes the risks that families, especially women, will have to use their microcredits to pay for the health cost of their children or other family members instead of using it as originally intended to generate incomes. Moreover, if they do not have to fear these risks, vulnerable households are more likely to take advantage of income-generating opportunities that might reduce poverty. Thus, when the ILO's Microinsurance Innovation Facility got underway in 2008, thanks to support from the Bill and Melinda Gates Foundation, it was natural that there should be a linkage between social finance and social protection. This close relationship has helped shape an ILO approach where we look at microinsurance not just as a financial service, but as part of a broader social protection system, and therefore subject to the principle that access to social security is a fundamental right. Microinsurance schemes can be seen not just as a risk management instrument for individuals, but as contributing to the extension of social protection to excluded groups, including women, migrant workers, and remote communities, particularly where the state has limited financial and institutional capacity. In this case, they should not only be evaluated on the basis of their financial viability, but also on their capacity to reach social protection outcomes. The key here, from a social protection perspective, is their capacity to provide coverage for the poor. Since the poor lack capacity to pay, subsidies become necessary and acceptable if we see social protection as basic human right. Indeed, as illustrated in the book you are launching, One of the key drivers behind the growth of microinsurance has been the willingness of some governments to pay for part of the premiums and make insurance more accessible to the poor. Based on my experience at the national as well as international levels, I'm convinced that microinsurance can form a bridge between social protection and financial inclusion, thus enabling the working poor to have access to a more effective set of appropriate risk management tools. The development of inclusive insurance market is a laudable objective, but self-financed microinsurance schemes may not be capable of delivering the right to social protection, which would mean sustainably reaching large segments of the most vulnerable population. When assessing the impact of such schemes, it is necessary to consider a broader development agenda. For example, the political contribution of microinsurance schemes such as mutual health organizations can be vital in empowering and giving voice to the excluded, advocating for and contributing to the building of national floors of social protection. Moreover, the potential of microinsurance to extend social protection is greatly increased when government included in national social protection strategies, linking microinsurance to other social protection components to create a progressively more coherent, efficient, and equitable social protection flow. This brings me at the end of my remarks to the social protection flow. ILO's experience with social security over 90 years led the office and its constituents to recognize that in a world in which work is often characterized by informality rather than formality, new approaches are needed. Microinsurance has been an important element in the innovative thinking and development of practical experience in building schemes of protection which respond to the needs of poor people and which are adapted to their capacities. This is now crystallized in the Social Protection Flows Recommendation number 202, which was adopted by International Labour Conference just last month with near universal support. And I'm happy, therefore, that these events bring together the two sectors of the ILO which have been developing these ideas intensively in the last 15 years or more. I look then forward to further fruitful collaboration and cross-fertilization between the new social protection flows initiatives side by side with the developing knowledge, experience, and ideas in microinsurance that are described in this second volume of the compendium. I wish you a very fruitful dialogue and look forward to seeing the result of it. Thank you. Thank you so much.
Thank you so much. I really appreciate you coming. And
I have
this is for you.
Thank you so much.
But I really appreciate you coming and sharing your thoughts with us today. And I realize you can't stay, but it's great that you're here.
Well, let me tell you that I will use it properly. Because I need it, in fact.
Excellent.
I needed such a product.
To hold the other books up on your bookshelf.
Thank you so much.
Okay,
Thanks
thank
a lot.
you.
Thank you.
Thank you, Mr. Chair.
My pleasure.
So I guess Craig didn't want me to introduce him. We all know Craig is one of the leaders in the topic of microinsurance. He's also the head of a social finance program and the team leader of a facility. He's the editor of a Microinsurance Compendium, 2 volumes now. We don't know if the third is coming soon. And Craig is going to present on the trends.
Okay.
Well, thank you all for coming. Both of those of you who are here in person, which is quite an excellent turnout, and all of you who are online. I wish I could see you. I'd like to know actually how many people are out there watching. It's exciting to be able to introduce this volume 2 because it gives you the opportunity to look back and see what has happened since the first book was published. And the reason why we published the second book is because there's been such great transformation to microinsurance over the past 6 years that it's really warranted an opportunity to look back and see what has changed and to be able to then share those experiences with others. And so what I want to do in the next few minutes is to be able to talk about 4 of the key trends that we've noticed since the first book was published in 2006. Just to give you a flavor for some of the ways in which this microinsurance space is evolving. The first trend that one notices and certainly gets the most attention is related to growth. There was a study done in 2006 in the 100 poorest countries that identified that there are 78 million low-income people who had insurance coverage. Today we estimate that almost 500 million low-income people have access to insurance, which is a dramatic change. Now, not all of it can be attributed to growth. We're looking now more broadly than just the 100 poorest countries. We're also including other large countries that have microinsurance that weren't in the original study. And there's also broader definitions to microinsurance that we used in the original study. But a big piece of it is related to growth. And I want to talk about a couple of drivers of growth that we're seeing. The first key driver that Mr. Diop mentioned explicitly is the involvement of government. The government willingness to engage and to subsidize the insurance has been a major contributor to scale. And John Woodall is going to talk more about that in the context of social protection. Another key role of government is creating an enabling environment for microinsurance. And the IIS has been actively promoting this, and many countries are now looking carefully at changing the regulations to accommodate microinsurance in their regulatory space. And Peter from IIS is going to talk about that as well. Another key contributor to growth has been the emergence of payment platforms. So particularly where people are able to pay for their bills, for example, utility bills, their phone bills, whether they buy their cell phone minutes. There's been a proliferation of infrastructure to be able to have these payment platforms, and those payment platforms then make insurance, microinsurance, much more available, or at least make the possibility of microinsurance more available, because the process of collecting premiums was a major expense when we looked at it 7 or 8 years ago. And now that there's more efficient and accessible payment systems, the premium payment process becomes much easier, more affordable. So the role of technology in this context plays a key role, and Eric is going to talk more about that today as well. Another driver of growth has been the emergence of automatic cover. Now, when we looked at this 6, 7 years ago, a big piece of what we were seeing was credit life insurance linked to microenterprise loans. And so anybody who got a microenterprise loan also got insurance coverage. That was an automatic cover. But now that concept is expanding to include lots of other types of people. People who buy bags of fertilizer can automatically get insurance. People who buy cell phone minutes can automatically get insurance. And so this emergence of automatic cover as a way of giving people a taste of insurance, giving them some exposure to it before asking them to pay for it directly is, I think, an important step toward developing an insurance culture. Whether we make this next step is, I think, a big challenge. Are we going to be able to move from automatic cover to opportunities for people to buy it voluntarily? And as Sarah alluded to, maybe that's what we'll see in Volume 3 if we ever get there. But let's stick with Volume 2 for the time being. So the first trend that I wanted to talk about was growth, this movement from 78 million to close to 500 million is a significant trend. The second trend is around diversity of the institutions involved in microinsurance. When we first looked at this several years ago, there was sort of two main types of insurance, institutional arrangements that were used to offer insurance. One that I mentioned already was insurance companies partnering with microfinance institutions to give insurance coverage to the borrowers primarily. And then the second one was the emergence of health mutuals that Mr. Diop mentioned, that the ILO has been actively supporting for many years. So those were the two sort of prevalent models that existed. In the intervening years, one of the things that we've seen is a huge flood of interest from commercial insurance companies into the microinsurance space. A study was recently done by the Microinsurance Network that surveyed the 50 largest insurance companies around the world, and of the 50 largest global insurance companies, 33 of them are involved in microinsurance in some capacity or other, but only 5 of them were involved in 2005. So that reflects a big interest from commercial insurers into this space. It's not just the risk carriers, though. It's also on the delivery channel side. We're seeing a whole range of distribution channels that are involved in extending insurance coverage to low-income people, not just microfinance institutions. So whether it's cooperatives or cell phone companies, whether it's utility companies or trade unions, basically any organization that has some sort of financial transaction with low-income households and has their trust is a potential distribution channel for microinsurance. And so the emergence of these alternative distribution channels has also contributed significantly to the scale as well. So the first trend was related to growth. The second trend was diversity. The third trend I want to talk about now is product evolution. So the initial products that we were seeing several years ago were either credit life insurance, so life insurance linked to a loan, or some sort of health insurance coverage often provided by a health mutual. Those were sort of the dominant structures, dominant types of products that were available through those two structures. In the intervening years, we're seeing a whole new set of risks that are now being covered, including agriculture insurance that my colleague Pranav is going to talk about. We're seeing new target groups that are being covered, like migrant workers, which Samia is going to talk about. And we're seeing these products that are out there to improve. So, for example, there's also great interest and emerging evidence with disaster insurance, which Alfredo is going to talk about. So new risks, new target groups, but also the evolution of these products to provide better value to the people who are covered. So moving from, say, a hospital cash product that if you're hospitalized, you get some money for the number of days that you're in a hospital, to a product that may cover the costs of you being in the hospital, to a product that may also provide some outpatient benefits, maybe a voucher for health checkups or discounts for pharmaceuticals. And my colleague Gina is going to be talking about some of the issues related to health insurance. So the evolution of the products in terms of target groups, in terms of risk covers, and increasingly better value products is the third trend. And that really leads naturally into the fourth and final trend that I want to mention, which is greater interest and concern about client value, about impact. And this concern comes from a couple different perspectives. I think when we first were looking at this, again, several years ago, the big issue that we were trying to figure out is how do we get insurance to low-income people? So it was much more on an access dimension that we were concerned about it. Now that we've not solved, but at least made great headway on the access dimension, now we want to see and find out ways to ensure that low-income people really benefit from the insurance that they're getting. Now, this is of particular interest to donors to see whether they want to support the development of future microinsurance. So do low-income people benefit from insurance? And it's also interest to academics because it's a very interesting academic question. So we've got a whole range of academics that are involved in doing various randomized control trials to assess the impact of microinsurance. But it's also interesting from a market perspective, wanting to see that if we're going to create an environment where low-income people will naturally turn to insurance as part of their risk management tools, they need to see value in those products. So while we've given some teasers to get people exposed to it, now we need to make sure that they get some real value and benefit from insurance. And so that's a big piece of the next trend. and my colleague Michal Matul will talk about that. Now, did I cover everybody? Yeah? Did I miss anyone? Excellent. So those were the 4 trends that I wanted to talk about. Growth, diversity of institutions involved, product evolution, and client value and impact. And with that, I want to turn it back to Sarah to get the discussion going. Thank you very much.
So let's see. Does that work? Yeah. Okay. So thank you, Craig. Let's turn to the speaker and let's start this overview of the different chapters. We bundled in the first part 4 topics. So we're going to start with social protection. We'll then have health, then migration, and then disaster insurance and climate change. So let me invite our next speaker, John Woodall. John works for the Social Protection Unit. And he's an actuary. He also sits in the steering committee of the facility. And he has an extensive... Let me invite you, John. John has an extensive experience in social security, especially in the design and the implementation of programs at the national level.
Thank you, Sarah. Good afternoon, everybody. As Sarah said, I work for the Social Security Department here, as many of you know, of course, and I have been sitting on the steering committee of the Microinsurance Innovation Facility for some time. So this afternoon it's my pleasure to be joining with a bunch of old friends. When Craig and Sarah asked me to prepare a very short presentation, I hope I can keep it fairly short, I said that I would like to frame my presentation in terms of a historical perspective of the way ILO's worked with Social Security. And I know that Craig and Sarah were a little bit doubtful about this. They don't really want this afternoon to be presenting a dusty old perspective on what the ILO does. But this perspective, I think, it has some advantages for me. And I feel a little bit justified because Craig himself has talked about a historical perspective. It's a good opportunity to look back and see what we've achieved, not only in terms of Social Security, of course, but in terms of microinsurance. What's been good about that, what lessons we need to learn from it, and to use that perspective to see where we go in the future. And I think it's the same with the ILO's perspective on Social Security, except, of course, that the timescale is rather long. But then that's part of my training in Social Security, is to see things hopefully in the long term. Well, the ILO has been concerned with Social Security ever since its start in 1919. And I think one thing that interests me about that timing is that in 1919, when the conference of the ILO adopted its very first Social Security standard, a convention on maternity protection. At that time, the ideas about Social Security and social protection, at least in a formal setting, were really very new. You know, we talk about the way in which Bismarck developed Social Security and social insurance. Those ideas were not more than about 20 years old at the time when ILO started. And I like to think that there was a sense of excitement in what we did around the subject of Social Security, the way we took that work forward, which is probably very similar to the sort of excitement that we feel right now in terms of the ways we can develop the ideas of microinsurance. So the ILO started, as I say, in 1919 to develop its ideas about Social Security. By the time of the late 1940s and 1950s, we had some much more specific ideas about formal social security, framed in terms of contingencies, risks. And we developed our ideas about social security in the same way as did many other actors around the world, in terms of specific coverage for certain risks. So the longevity risk of old age, which is covered by pensions, injury risks, unemployment risks, and so on. But the one reason I wanted to highlight that particular time period was that this was a time when the ILO was becoming a part of the United Nations, and almost everything we did was framed in the same framework as the development of the Universal Declaration of Human Rights. And at that time, social security was specified as a human right, and ever since then, we have taken that as the framework in which we've developed all our ideas about social security. What is true about the developments in the 1940s and 1950s is that we saw social security in a rather formalised context, and since then, perhaps in the last 20, 25 years, we can see that the development of a formal labour market everywhere in the world is just not the way things have happened. In most countries of the world, Europe accepted maybe, North America, what's happened is that the labour market, workers, their families, people in general have had to live with increasing informalisation and informal economy. And the formal ideas of social security is something that we've had to start to adapt to that new reality. And it's in that context that we talk about the parallels, the linkage between social security and microinsurance. That's the topic of the chapter of the book that we're presenting to you today. But as Hassan Diop said to you earlier on, that's also the framework, the context in which we in the ILO and our sister agencies in the UN system, we've developed this concept of the social protection floor, which is designed to bring the ideas of social protection to the widest possible spectrum of the population in every country of the world. But it's also important for me to say that that concept is of a piece with the older ideas about social security. In other words, that every person in the world should be protected as of right by some kind of social protection system. Well, I shouldn't take too much time, but you will see when you read the book, hopefully, that the big message is microinsurance sits there at the intersection between social protection, social security, financial inclusion. And there are many ways in which we can draw linkages between the ways in which the modes of use of microinsurance with what the extension of social security, both in terms of its coverage of people, individuals, workers, families, and the quality of the coverage that an individual gets from the social protection that's available. Now, the big message is really diversity. Again, Craig has mentioned this. From our point of view in the Social Security Department, in developing our ideas about the social protection floor, it's been a very explicit principle that we look for every possible vehicle for protection of people against poverty and vulnerability. And there, microinsurance obviously plays an important role. The slide mentions several ways in which microinsurance can play that role, either in parallel or in linkage with more formalised social security and social protection systems. But there are some other vehicles, some other ideas in the chapter as well, so I have to urge you to read it. I've probably said enough for now. I was asked to give a few teasers, and later in the afternoon I think we have the opportunity for questions and answers, sharing of ideas, and I shall enjoy participating in that. A teaser, of course, teasing is a word with a number of different connotations. It might mean puzzlement, so I hope that we're not going to puzzle you too much. In a more upbeat sort of way, it also implies the idea of a challenge, and I hope we are going to challenge you. I see there are people in the room who've been involved for much longer than I have with developing the ideas of microinsurance in the context of social protection. I'm very happy to see Christian Jacquier here, who has really been a mentor to the ILO Social Security Department in that way. But let me stop now. I hope that that's an introduction to where we are, and that will provide a starting point for some challenging questions and answers later on. Thank you very much.
So let me invite Gina, who is the Chief Project Manager of the facility. Okay, Gina has an extensive background in health insurance, and she worked for major insurance companies in the US and in Germany, such as Aetna and Allianz. She's also the focal point on health for the facility.
Thank you, Sarah, and good afternoon, everybody. Healthcare is arguably the most important, most intimate, and possibly the most expensive service that any one of us ever receives. The demand from low-income households to manage, to have viable options to manage the health risks that they face has been well documented. It's also well known that efforts to provide better solutions to greater numbers of people are inherently complex and challenging. This slide shows two women who are illustrating from their own point of view some of the challenges that they face to access affordable health care. I'll try to bring out a few of these examples using my own words now. So first, the typical health microinsurance product covers hospitalization. Hospitalization is an event that affects usually about 5% of the population in any given year. Hospitalization insurance can be relatively simple to design. It can be relatively cheap to administer. Yet it falls short of covering the spectrum of risks that people are trying to cope with. In fact, there's evidence that shows that in some countries, outpatient health care, because of its high frequency, and not inpatient care or hospital care, is the key driver of the high out-of-pocket expenditures that poor households struggle to cope with. Second point, there are multiple stakeholders involved in the healthcare arena. In particular, you have healthcare providers, doctors, hospitals, pharmacies, and the like, who oftentimes have very different agendas, motivations, and objectives. Third point, low-income households in developing countries face what's called a double disease burden. What I mean by that is that not only are they struggling to manage the high incidence of infectious disease caused by poor sanitation, hygiene, or other factors, but in addition, there's an increasing prevalence of chronic diseases such as diabetes or heart disease. Fourth point that I'd like to make is health insurance schemes face yet another conundrum to manage fraud and other forms of misuse of healthcare services and the products that help finance them. This can be intentional or unintentional. It can come from patients and it can come from healthcare providers. So despite such challenges, it's important to note that there are some positive indications of positive impact of having health microinsurance. Number one, people who have health insurance typically will experience lower out-of-pocket costs. The household finances improve. Number two, those who have access to health insurance do receive more. They go to the doctor more often, they receive more health care, they have a more active health-seeking behavior, as it's called. So this impact needs to be more conclusively linked with health outcomes themselves. In other words, we need to know if this increase in health, receiving health care actually leads to people being more healthy. Looking ahead, we've identified a couple key areas of focus, and I'm going to highlight two today. So the first is public-private partnerships. We see public-private partnerships as a vehicle to help schemes achieve scale and to reach excluded populations. Done right, public-private partnerships can leverage the reach and the financial capabilities of government with the know-how, the innovation, the responsiveness of the private sector. Secondly, there's considerable scope to offer more comprehensive products, which are designed to help clients meet the range of healthcare risks that they face. So in particular, there's demand for outpatient cover. And within that, there are benefits for consultations, access to medicines, and diagnostic procedures. There are additional benefits and services that can be bundled with insurance to increase the value of the products. With these so-called value-added services, even clients who don't fall sick and who don't incur a claim can still benefit from having the product. Examples of value-added services include discounts for medicines, for supplies such as eyeglasses. They can also include complementary services like a call the doctor hotline or free medical checkups. Another opportunity for health microinsurance to products to improve is to reduce the burden oftentimes placed on clients to finance the cost of health care up front. This diagram illustrates a traditional claim model. It's a reimbursement model, and if you see, it places the client in between the healthcare provider and the insurer. So not only is the client having to cope with an illness and accessing medical care, but oftentimes they have to resort to taking out short-term loans from money lenders, and ultimately lodging a claim with the insurer and hoping and waiting to get reimbursed. It can be a severe burden. The second diagram shows an alternative payment model for health microinsurance schemes. Here, you can see that the payment now, instead of being made up front by the client, who's in the middle and then has to retrieve and seek reimbursement from the insurer now makes the payment for the health care service on behalf of the client directly to the healthcare provider. While these so-called cashless models aren't without their own challenges, they have shown an ability to provide good value to clients and as well to enable insurers to better manage the delivery of health care. So in summary, I've shared some of the unique conundrums facing health microinsurance, and I focused on two key areas of focus: public-private partnerships and offering more expanded benefits, which focus on outpatient care. As a final comment, what I would say is it's always critical, regardless of the intervention, to focus on reducing illness and promoting health in order to promote the financial viability of health insurance schemes, as well as to promote the health and the productivity of the communities that they serve. Thank you.
So let me invite Samia. Samia is an international migration officer, and she recently piloted a feasibility study on health microinsurance in Senegal.
Yes. Thank you, Sarah. So my topic today is migration-linked microinsurance. And I would like first to say that our interest in microinsurance came from the fact that migrant workers and their families often face barriers to access formal social protection. There is a protection gap for various reasons, because of the status of the migrant, because they work in the informal economy sometimes, also because of the time of their residence or the time of employment. And in the absence of social security agreements or social protection floors, it is important to assess the possibility of other alternatives like microinsurance to help migrants cope with risk. As migrants face different types of needs and specific risk, we observe different types of microinsurance products, and the most common products that we see are cover for accidental or natural deaths, for also the repatriation of the body, but we can also find products covering funeral costs or remittance insurance products. Another migration-linked insurance product is health microinsurance, but we observe less international experiences on these specific issues and a few challenges. From the compendium, I would like to highlight a few lessons learned from international experiences. The most important one, I think, is the legal and regulatory constraints, and it is because insurers are usually not licensed in both home and host country, which make it difficult for them to target migrant workers and sell their insurance products. But it is possible before migrants' departure, sometimes through placement agencies. There is also the issue of marketing target. Is it better to target migrant workers or their families? I would say both, ideally, but it can be quite expensive, and you can face also legal and regulatory constraints. But also, some would say that it's better to target migrant workers directly because they are the one assuming the responsibility for this informal type of insurance. But at the same time, I think it's also important to target migrant workers' families, also because it's easier to reach them in home country models, and also because they are the one requesting this type of insurance. So they know also better their needs. Another important point is the migrant worker status. Of course, it's difficult to target them sometimes because they are undocumented and they don't want to be reached. And in this regard, it can be very important to find key partners to help approach migrant workers. And I would say that diaspora associations are very important in this matter, because migrant workers trust them. They also trust money transfer agents, and it can be also key partners for the insurance product. Now I would like to say a few words on health microinsurance and talk more specifically of one experience that we had, and we implemented this feasibility study in Senegal. We wanted to explore the feasibility of using a portion of migrant workers' remittances to finance a health microinsurance product covering migrant workers' families in Senegal, in a specific region called Matam. And the main opportunities that we observed from this, the first results of this feasibility study is that this health microinsurance seems to be a priority for more than 76% of the families that were interviewed. And we observed that also remittances were regular and significant, which will be very good for the sustainability of the insurance mechanism. Another important part is, I think, that this will help also access the access to health services for migrant workers' families in this specific region, but in Senegal in general also. They have very limited access to health services. Only 20% of the population is covered by health insurance. The main challenges that we can observe are first, that migrant workers have limited contribution capacities. Almost 80% declare that they have difficulties mobilizing the resources that they would like to send to their families and in order to respond to their request. And some often have to borrow even the money to send their remittance. Another important issue is the transparency and the management of the insurance products. it is essential to have soundly managed insurance product to ensure the trust of the migrant and their contribution. The first results from the study show that it will be somehow well appreciated by migrants that the data and risk management are delegated to professionals. And it will be also very good to have a representative from local communities involved in the governing body of the insurance, and also migrant workers involved also in the supervisory body to ensure and monitor the traceability of the financial transfers. What was also interesting is that they will ask for seeing first the results and if the insurance mechanisms work properly before even starting to contribute. So reaching the trust of migrant workers, it's not easy. Another important point, I think, is the quality of local health services in origin country, because somehow they will have difficulties to contribute if they are not sure that their families will have access to proper health services. And this also can impact the design of the insurance product, because, of course, if the quality is not at the level expected, they will ask for evacuation. That's what we observed, and this can have, of course, financial impact on the insurance product. As a conclusion, but rather to open, I think, the discussion, I will say that from our point of view, I think that more research needs to be implemented, and also pilot initiative to see better the link between microinsurance and migration, and also how we can link these microinsurance products to formal social security schemes. Thank you.
So let me welcome Alfredo. So Alfredo is the director of the International Program on Crisis Response, Recovery and Reconstruction. His work focuses on climate change risk mitigation and adaptation.
Okay, thank you very much, Sarah. Give me 1 second because I love to track my time. Okay. Well, thank you very much to everybody. First of all, I am not a specialist on microinsurance, but as part of the core of my job, I try to deal on crisis response more with preparedness and prevention, because I think this is more our duty as a development agency than just to deal with the humanitarian response after it happens. And dealing with prevention and preparedness, we are associated to managing risks. And this is where we create a connection with microinsurance, and we are very happy to have this opportunity to present our case. First of all, climate change, because the chapter specifically which I refer is creating the linkage between microinsurance and climate change. Climate change is not a hazard. It's a process, it's a natural process, but which is expressed in some ways, in dramatic ways, because the people is not ready for these changes. But normally it's expressed through the exacerbation of hydrometeorological events, who increase the exposure to natural disaster. But natural disaster per se is not the same that a natural hazard. A natural hazard is something that happens anywhere. Every time in the world we have a major natural hazard, could be an earthquake, could be a strong flood, or could be whatever you want, a cyclone, a typhoon, that are not affected populated areas. And these are not disasters. The disaster is when we connect man-made situations and natural hazards in such a way that they are not appropriate conditions to deal with this unexpected situation. But in most of the cases, what is the difference of a major earthquake in Japan or in Chile, for example? Probably the example of Chile was very interesting to analyze because we was talking about an earthquake of 8 degrees. This is a major event in the Mercalli scale. But in terms of the damage, in terms of economic damage and loss of lives, was very controlled. The other way around, we have the same year in Haiti, an earthquake that was much lower than this, 7.1 degrees, and who kills more than 200,000 people, and create a terrible back on the way of Haiti to go out of poverty and towards a trend of development. This is a bit the difference between the connection between preparedness, hazard, natural hazards, and disasters. How we could deal with these issues? Since our technical point of view, we have 2 areas where we are dealing on reducing risk. One is adaptation to climate change. Adaptation should in some way prevent that the level of rains are going to reduce, that the weather is going to become very hot, and for example, our regular crops, our regular economic activities need to change to adapt to this new situation. And probably we are going to find some advantage of the new situation because we are going to depend less of the scarcity of water, for example, than before. But if we are not ready, this additional water could create major problems to us and just generate really a disaster. Dealing specifically with disaster, the way how we respond to this is what we call disaster risk reduction or disaster risk management. And both adaptation to climate change and as well disaster risk management has 2 levels of operation. One is on the enabling environment at the macro level. Another is the micro level, specifically client for those of you who are involved on the microinsurance business. Let's explore what is the way to deal with the micro-level challenges. First of all, the people who are exposed to these hazards, to these changes in the weather on the hydroclimatic events, need to identify the risks and the threats, then review their actual economic activities, and to try to tackle the challenges that these changes could provide to their activities. Need to implement adaptation measures, plan for business continuity because they are a process where the activities are going to be taken progressively and a full match situation where we are going to be in full synchrony with the new conditions of the weather. And finally, we need to introduce always mitigation measures because it's almost impossible to reduce to 0 the level of risk. And the evidence is the case of Japan, for example. Japan was one of the countries that has better prepared for natural disaster risk, and we see the disaster with the previous earthquake, tsunami, and as well this environmental crisis created by Fukushima. Anyway, at this micro level, we have already a very interesting example that has been mentioned on the book, that is dealing with another kind of consequence of climate change, drought. Africa is regularly exposed in the last year to a very severe process of drought. But if you compare what happens on the decade of the 70s and what happens of the 2000 drought, there is a very important change on the impact the drought has caused to, for example, the pastoralist activity. In the 70s, Ethiopia has really facing a very dramatic situation with more than 1 million casualties and enormous destruction of the livelihoods of the people, very extended one. In 2011, we have a new, very severe drought at the same level of 1970s, yeah, but with a less impacting result. What happened? The people learned from the previous lesson. The government mobilized themselves, international community support the people, and different NGOs as well has been involved, but all of them working together to reduce risk. And this is a positive example. Now, following this example in Kenya, a microinsurance scheme is providing a mechanism to mitigate the impact of the losses that anyway are going to happen to pastoralist farmers, and in one of the pastoralist areas. Just as a reference for the future, we in the ILO, we produce two tools that are associated with this issue. A multi-hazard business continuity management, that is a tool to create the conditions to the business to prevent what is going to happen and to see how they could reorganize their business in order to deal with the emergency, and local investment on climate change adaptation in a brief. You are going to see the publication exhibit and the entrance, and as well just the way how you could obtain if you're interested in these materials. The second is the macro level. And in the macro level, you have principally 4 activities. Identify what are the critical response, who are the institutions who need to be involved, what are the capacities that we are going to require to guarantee that we are going to contribute to reduce risk and to be ready to mitigate as much as possible the impacts and to facilitate the process of recovery to reduce the pain for those who are going to be affected by these kind of phenomena. This is going to be expressed at the end with a diminution of the exposure and institutions who are more ready to operate. How is reflected in an example this? They are an interesting new product that has been created as a result of an extended partnership of different institutions, and the Microfinance Innovation Facility has been associated through research to them that is called Microinsurance Catastrophic Risk Organization. It's a new product developed in Haiti associated with a different kind of catastrophic events. This is, for me, a very important initiative, but need to emphasize a bit more the association with disaster risk management, because the product is welcome for the population because they suffer already the losses, but as well for those who are engaged in supporting this kind of process. For us, it's importantly to need to highlight the association between the microinsurance and those who are working on the area of disaster risk. And I mentioned as well 2 reference tools for that. And finally, to try to summarize a bit what we identify analyzing these kinds of evidence. We consider that disaster risk reduction and climate change adaptation is a condition that is necessary for make feasible and sustainable the business of microinsurance for catastrophic scheme, disaster, or adaptation to climate change. That cannot be tackled alone only by the microinsurance companies. Need to be an extended partnership with the government, who need to create and enable policy environment, institutions that need to be ready to work on reduction of risk and adaptation, and as well other partners who could guarantee and contribute principally on reducing risk. This is going to provide sustainability for your products, and is going to provide sustainability for the economic activities of these poor people. The second important evidence that we find is that it's difficult to sell insurance in general, at least you have conscience of the risk. The life experience is obviously the most normal. When something happened to me or something very close to me, it's easy to understand what are the risks I am exposed. And then the people could be more suitable to accept and to assume the cost of a microinsurance scheme. But in some ways, when you have major events, like I mentioned, the tsunami in Indonesia, the earthquake in Haiti, the earthquake and tsunami in Japan, you could create as well a kind of a mirror impact that is a tool through communication campaigns who are going to facilitate the people and to put them on the situation and what happens if this is happened to me. Yeah? And then with this kind of mechanism, you could influence a change of economic culture, inducting the people for one side to make more open to changes in the way how they are conducting their business, including mitigation and adaptation measures, and as well to decide to move toward accept to pay for a microinsurance scheme. Finally, in terms of some additional connections that are important, the connection between microfinance schemes and microinsurance is as well important, because both of them could contribute to reduce risk of portfolios. Why? Because in most of the cases that I study and participate in terms of natural disaster, microfinance companies, microcredit companies completely depleted their portfolio after a major event. And through a mechanism of microinsurance that are facilitating compensation for both the microinsurance company, the microcredit company, and as well the client, they are creating conditions of win-win among both of them, because they could restore their activities as soon as possible, and they could be eligible for continue working and producing for the client. But there is a second element that is important, that could create a new kind of product for the microcredit schemes to begin to fund implementation of measures to reduce risk and to adapt to climate change. This is part of the challenge, and we are going to discuss about on the section of question and answer. Thank you very much.
So now we're going to break for a Q&A session. Jasmine will moderate this session. And Jasmine, do you have any question from the onliners?
Yes, we do have a few, but of course I understand in the interest of time, maybe we can just pick some. And we mentioned that we will be documenting the breakout session later on, so then we can also share the documentation with answers to questions to our to all our participants on site and in the virtual room. So we have a question here from Gaylene Mapano from the Rural Bankers Association of the Philippines on health microinsurance. So this is addressed to you, Gina. What are the key drivers to achieve success, scale, sustainability, and value in health microinsurance?
Thanks, Jasmine. That's a really broad question. In my opening remarks, I touched on some of the key drivers for success in health microinsurance, in particular achieving scale. And this was the concept of public-private partnerships. I can also mention a few other things that are really important. You know, I talked about more comprehensive products and this focus on outpatient care. But by and large, healthcare insurance isn't well understood by clients. The products need to be simple, and they need to be conveyed to clients in ways that they can understand them. So I can point to the example of RSBY in India, which is the national health insurance hospitalization cover for low-income households there. And it is an example of a public-private partnership that is achieving quite massive scale. It's still in rollout, and last time I counted, there were, I think, 25 to 30 million households, which is approaching 80 to 90 million individuals, now probably approaching 100 million covered individuals. Yet, this product is almost free to enroll, but it's striking that many, many households choose not to enroll. So there's more to it than having a product that on the surface offers excellent value. It's nearly free, but we're not quite sure yet what some of those drivers might be in terms of unlocking demand and making it simpler. So I would point to a couple of other things that can also enable the scale-up of health microinsurance. That is considering flexible payment options and also timing the enrollment cycle for products. We worked with one partner that learned that the schedule that they had set up for the insurance didn't work because it wasn't well timed with the agriculture cycle and the economic activity of the community, so that when they were offering the insurance, clients didn't have money, so they chose not to enroll. So oftentimes there are barriers that may not be anticipated that need to be understood. So I think I'll stop there. Thank you.
Thank you. Another question from Gustavo, formerly from the Social Finance Program. I think this is addressed to you, Craig. A lot of debate has been recently going on regarding how to correctly assess the impact of microfinance, especially loan provision and poverty. Now, to microinsurance, are the practitioners of microinsurance aware that with the scaling up of the business, the issue of assessing right what they do becomes more and more important?
Okay, I'm not sure I totally got the question, but I think one of the things that's interesting about assessing impact is that it's very hard to attribute the insurance intervention to the results that you have. And so in order to do it effectively, you need to use what's called, say, randomized control trials to be able to separate those that have the treatment, in this case insurance, and those that don't have insurance in a way that's completely random to be able to control, to really assess whether the insurance has the impact. Now, if the product that's being offered is not quite good yet, I talked about the product evolution period before. If we're going to a lot of trouble to assess the impact of products that are not particularly good, then it's going to come out with the answer that insurance doesn't have a particularly good impact, when in fact the real answer is, well, the insurance product that they were testing didn't have a particularly good impact. So I think an important piece to this discussion is the timing. And what we want to really do is to use we definitely need to be assessing the impact of insurance, but we want to do it with products that are mature and stable in order to be able to see whether good products have the impact that we assume that they're going to have. But we definitely need to test whether they do have that impact.
Okay, thank you. Another question about health insurance again, Gina. So for health insurance, what are some ways to prevent anti-selection? This is from Sosan Iskander. So ways to prevent anti-selection, especially in developing countries where there is no access to health history and hence little room for exclusions.
Short answer to minimize anti-selection would be to enroll large groups of people. So you want to have healthy and sick, young and old, people with different propensities for illness included in your population. So large groups is the first way to do this. Another way is to adjust the enrollment process that's used, and to consider, I mean, if the health enrollment can be mandatory, this is a way of capturing all potential members within a population. The challenge with voluntary products, when people can choose to enroll or not, is that oftentimes those who may anticipate greater use of the products will be more inclined to enroll and to use the product. So though for microinsurance, the pre-existing conditions need to really be minimized. I would discourage that. It's more commonly used in conventional insurance, but I think it's ideal to capture large aggregated groups that come together for different purposes. They may be members of a cooperative, for example, and to enroll that entire group.
Thank you.
So let's move to the next topic. Our next speaker works with the Secretariat of the International Association of Insurance Supervisors. His responsibility covers the area of supervisory cooperation and financial inclusion, which includes microinsurance.
Yes, thank you. It's my pleasure to be here. I hope everyone can understand me from your position where you're sitting, and everyone online, hopefully. It's my pleasure to talk to you here today, and as introduction already said, my world is a world of supervision and regulation. And therefore, my key statement of today, you can even call it the teaser, and supervision is always about teasing in the sense of challenging. There's also a challenging element in supervision, is that supervision supports access to insurance. Now, why is that? First reason is that supervision, the objectives of supervision, one of the main objectives of supervision is to protect the policyholder, to protect the consumer, the customer of the insurance product. Also, because of supervision, if it's done properly, it will create trust in the system, trust by the consumer, trust by the policyholder. And why is that? Let me go to the page up. No, that's the Q&A, so I went down apparently. Yeah. I think I skipped a page here. Yeah. Now, why is that? Now, first of all, a supervisor regulates the accession to the insurance industry. It's a sort of gatekeeper. It will check if someone is solid enough, an insurance company is solid enough to enter the market and become an insurance provider. In addition, it will subsequently keep on monitoring the capability of the insurance to meet its commitments, its liabilities. Can it pay out claims at the end of the day if something happens? And if not, of course, you can imagine what that does to the trust in that insurer and even the entire insurance sector. But also, a supervisor in a jurisdiction is required to check if customers are treated fairly. And if not, if an insurance company hides behind small print just to avoid paying claims out, but will also jeopardize the trust in the whole system. And finally, the insurance supervisor is charged with keeping the insurance sector stable, or as an effect of its supervision of the financial position, of the conduct of the insurance providers, but looking also at a broader perspective sometimes. If there are groups operating in this jurisdiction, it will also take a broader perspective. So all these elements contribute to trust in the system, to consumer protection, policyholder protection. However, supervision can also be a party pooper if it is not carried out correctly. Very important thing we stress as IAS that all supervision, supervisors, regulation needs to be in compliance with our insurance core principles. What are these? These are the norms and standards we have established as IAS and which are generally recognized, that form and provide a framework for regulation and supervision of the insurance industry. It has to be met, it will be assessed, and you will have to demonstrate that you meet with these requirements as a jurisdiction, as a supervisor in the jurisdiction. But also, that's not the end of the story, just meeting these ICPs. They have to be applied with proper regard of nature, scale, and complexity of the situation in the market. We call that the proportionality principle. What does that mean? For instance, that if there is a core principle on financial provisions, on financial reserves, that you could look at the risk that is being carried by that insurance provider to see how high these reserves should be. You could imagine that if the business is very simple, that there might be a simple way of reporting on your returns to the supervisor. things like that. And it so happens that we think that it's so important also for inclusive insurance markets that we're going to launch also to get out a paper on, an application paper on insurance and regulation to support inclusive insurance markets. It's being developed and it's being released for consultation tomorrow. It's for all of you to have a look at if you want to. It will be on the website, iisweb.org, and we would welcome any comments anyone will have. It's public, for public consultation. Anyone can submit comments if you like. The linked to the discussion on our ICPs is the fact that, well, actually it brings me to the agenda. What is it on the agenda of the IIS? In my view, what is urgently needs to be looked at by the insurance world is not just the principle of proportionality, but also formalization. Formalization, licensing, registration. The IIS, the opinion of the IIS, starting point is that insurance providers, insurance companies need to be licensed, which is sort of the checking at the gate by the gatekeeper as the insurance supervisor. Before you're allowed in and sell insurance, you need to be checked upon. Of course, there is very often in some jurisdictions a huge informal market with informal providers of insurance. And as a starting point, we would welcome that these are being formalized, that they're being gradually brought under supervision. And that's one of the issues we've been looking at over the last few years as IIS, along with the Access to Insurance initiative. Doesn't need to be done overnight. This could be staged in phases. You could also imagine that sometimes what you see is that agents as providers of insurance, selling insurance, will start with mediating from their traditional business until they have a sort of sizable enough that they are sustainable as independent insurance companies and will then have a form of regulation, a form of registration. What we think is important is that there needs to be a form of overview, and it could be done by licensing, but also, as we'd recognize in our insurance core principles, by a form of registration. I spoke about the agents, and probably will broadly recognized that to reach out to the underserved in various countries and jurisdictions, the distribution network should fit how these underserved are located, where they live, where they work, how they migrate. And that's why you typically see in microinsurance and inclusive insurance markets various types of agents operating. Not just the traditional intermediary, insurance intermediaries, but banks are predominantly present, but also cooperatives, also shopkeepers, mobile phone providers are there to sell insurance. But that brings us to certain challenges from a supervisory perspective. From our perspective, this is a type of outsourcing that needs to be carefully be arranged. And it's good that there's a lot of creativity in this sector to develop ideas, to see how we can reach out to these underserved. On the other hand, from an insurance supervision perspective, we need to be careful that the whole trust doesn't disappear from cases of fraud occurring. Or it calls for questions like, how are these commitments being registered if it's done by the shopkeeper on the corner? And how does the premium get to the insurance company? All things we need to resolve. That shouldn't be a final barrier that spoils this way of distribution, but on the other hand, we need to be aware that the ultimate goal remains reaching out to the poor, the underserved, and helping them. And it would be a pity if just by instances, sometimes it needs just instances of mis-selling or fraud, the whole trust disappears and the whole beautiful initiative will become empty. fraud is a typical form of market conduct. Brings me to the final big bullet category. Market conduct is one issue which is getting more and more attention. Typically, you would see in the inclusive insurance market products that fit the needs of these typical users of this product, sometimes with short terms, lower premium payments, flexible payments. Ideally, that's what fits into the product design. But also the question, does this product really fit this particular customer, is something that is getting more and more attention. But also the claim settlement process. How do insurance companies deal with claims settlement? I've just read through a report on a flood, I believe it was in Ghana, where it was made clear that the way the claim was being settled has an impact on how people look on insurance. Look back on insurance as a useful thing or not useful, how it sort of affects their trust. They don't always have the capacity to bridge any income gaps, so they need to be able to get to money quickly. So claim settlement processes need to be expeditiously organized by the insurance company, and disputes settled quickly in order to help maintain their trust in the system. But again, how does that fit in with supervisory concerns? So that's why it's on the agenda. For distribution, commissions are a huge issue, can become a huge issue. What we typically see in discussions of commission, that is the cap is removed, while sometimes the lessons learned from mis-selling cases in the West will tell you to be very careful with commissions. So there are things to be looked at from a supervisory perspective as well. And that's on the agenda for the future or for the question and answer later today. So I'll leave it at that. Thank you for your attention.
Our next speaker, Eric, is an international consultant. He has designed and implemented both back-end and front-end solution for the sector. Eric, the floor is yours.
Thank you, Sarah. The technology revolution. It sounds like a platitude, but for me it really means something very profound. I've been in the technology business for my entire career. I've seen it in manufacturing, in engineering, in banking, many different areas. But what is really extraordinary about microinsurance is that we are having, probably for me for the first time, the industry growing exponentially as the technology grows exponentially. When I think back of my work in manufacturing 25 years ago, internet was just coming in, manufacturing was in decline in the developed world. So they were sort of like forces in opposite directions. Here we have the very wonderful situation that we have, as Craig was pointing out, an industry that almost didn't exist 5 or 6 years ago, and a situation when we could go into the developing world and say, access to the internet, people say, what's the internet? And now within 5 years, this has completely changed. You can get better access to the internet in northern Nigeria than you can get in Geneva sometimes with wireless connections, I found. So for me, this has been a really interesting personal experience to, at this point in my career, to participate in such a wonderful revolution. What is technology all about? It's fundamentally about this problem of scaling. As was mentioned by Craig, we are in an industry which is scaling extremely rapidly. Now, as we know, rapid growth creates all sorts of problems. Okay? Anyone who's had teenagers knows what this is all about. And so, fundamentally, what we're trying to do, I see the I'm not in the microinsurance business per se, but I see this business as being one of addressing a mass market. Going from a market, from an approach to insurance, where in the past we were sending an insurance salesman around for somebody to sell them an insurance policy, to trying to insure 800 million people in India. This is totally a completely different world model, and we have to understand that as the market changes, in this way, we have to change many things about microinsurance, and maybe technology can help to do that. The traditional role of the technology is to reduce and to redistribute the costs. We're not going to reduce the costs to zero, but it's important that we can move the costs from less productive to more productive areas. In particular, we should be thinking about adding value for the client. That's absolutely fundamental. We shouldn't be worrying about how much time we're spending trying to settle a claim. We should be trying to settle a claim as quickly as possible, which corresponds to reducing the cost of settling the claim. So obviously, the lower administration costs is one of the first things that we want to do. As part of that process, we need to be able to integrate functions together. When you have a small organization starting up in microinsurance and everyone sits around and have a cup of coffee to discuss a claim, that's possible when you have 2 or 3 claims, impossible if you have hundreds and hundreds of claims per day. So you have to change the processes, and we can't just sit around and have coffee and discuss this. We have to create a process that is commensurate with the problem at hand. There are other areas, of course, which talking about the reducing of fraud that was mentioned. It's not so much the reducing of fraud at the front end close to the client, but where it happens later, okay, up inside the system. And having proper information right from the beginning is going to help reduce that fraud, because adding a 0 is much easier to do somewhere later in the process than right at the beginning of the process. But I think probably more important as we go towards the future than purely the administrative issues is to understand our market, to understand how we can redesign our products because of the technology, and how we can take advantage of these opportunities and to improve customer service, i.e. to add value. The other point I want to make is that the technology introduction is a big stress test. We've heard about stress tests for banks. Well, this is introducing computers in a microinsurance company is about as stressful as you can imagine. It means everyone has to relook at their own jobs, try to understand how they can redefine themselves, as, well, I've been doing administration, maybe I should be thinking about marketing. These are opportunities for people within insurance companies, and they have to redefine themselves, reinvent themselves, otherwise they won't make it. I think my guess is that based on my experience with the manufacturing industry, probably 50% of people who are in microinsurance today will not be in 5 years' time, because they won't be able to make it through this particular hurdle. So it sounds pretty bleak, but there are some issues, okay, that we can focus on. What are the challenges that we can address? First of all is the high cost, upfront cost of the technology. This occurs in particular for back office systems. I've done consulting with many companies involved in microinsurance, and I am disappointed, having been from the supply side myself, in the way the products are being offered for back-end systems for companies trying to introduce microinsurance. So the cost of these upfront costs are inhibiting the scaling of sustainable solutions. Okay, a particular example, and I think will be mentioned later in the presentations, is collecting weather data. Enormous infrastructure costs involved in that. You've got, it might rain in your field and it might not rain in the next field. Okay, it's really important to be able to have the right sort of coverage. That inevitably means that there are costs involved, and there has to be, on the supply side, some work to reduce the cost of the collecting of that sort of data. Okay, last point on that side is I think a lot of the technology suppliers don't have the right business model to address the needs of microinsurers. They think, big insurance company, AXA, right, let's try and deal with this microinsurer as if we were trying to deal with AXA or with a major insurance company. That is not going to work, and I think it's a major impediment. So these are some of the problems that have to be reduced. The second point is, I think that on the kind of response to this is that we've got a proliferation of standards. I was discussing with Peter earlier saying, standards are a good thing, the more of them we have, the better. Actually, that is not a particularly good idea. We're going through a stage now of rapid growth, which means that, for instance, donor-funded projects are generating a proliferation of solutions. They're all going to disappear. Okay, this is great, wonderful, creative thing, but in fact, it's a long-term waste of money. We have to make much more effort to work together to improve the processes so that we can have standardized processes, standardized data so that we can exchange these things so that we can get low-cost, off-the-shelf products and not have to go and spend $250,000 to develop a piece of software for some small application in Senegal, for instance. That does not work. So I think that this on the positive side is we have an opportunity to standardize, work together and improve and reduce the cost. This is what happened in the manufacturing industries. They realized that the supply chain had to be improved, and it wasn't the cost of a particular widget that was, that we had to reduce the cost of the widget and not focus on the widget and focus on the value added of the product to the client. So that's why the automobile industry is working together in a way that 25 years ago was completely unheard of. The same thing has to happen in the insurance industry. That means the insurance industry has to band together and work together with the suppliers and force them to reduce the costs. But working together is the only way forward in this particular way. So the answer is success through cooperation. Here we get a couple of examples here. We need cooperation between the microinsurers, the technology providers to develop cost-effective platforms. The role of government is extremely important in this because it's clear if, as a supplier, I would look and say, in this particular country, there are no regulations, we don't know whether our software is actually going to be accepted as a standard in 5 years' time, why should I invest? So it's very important that the government also be involved, and in many of these examples here, we have the support of government authorities in the regulation and in also, especially in the managing of payments and things like that over, for instance, the internet. So premium collection is one of the big success stories. We've heard about it so that the aspect of collecting the money has been reduced. This is what Craig was mentioning at the beginning. That's just the beginning. That's the easy bit, okay? Because in many ways, that's being provided to us by companies like MTN and others that are saying, hey, we can do mobile money. So we should be able to take advantage of that. Second dimension of this is the notion of integrated microinsurance. I take a particular case here of Dhan Foundation in India, where this is a collective that they've put together all of their products together in one single, let's say, support package. That's a very intelligent way of looking at it. Provides added value for the client that says, I don't have to have a different application or different interface with my insurer for the livestock or for the health insurance. It's all done in the same way. That makes it, from the point of view of the client, very, very attractive. Another aspect not sufficiently yet developed, I think, is the whole idea of product design. Getting involved, getting the client involved in feeding into what their demands are. Technology is available to do that. We need to be thinking about how we can do that more. And then finally, this whole idea of weather insurance, and we're talking about the disaster management and things like this, this needs a global response. We can't be putting 1 or 2 weather stations here and there and hope that we're solving the problem. This has to be done with satellites, with local ground stations, with all sorts of crowdsourcing technologies and things like that to allow us to collect the information that we need. So in terms of teasers for the discussion, what I would like to be, people to be thinking about is how can we use the technology not only to reduce the costs, but to improve the client value. The value to the client, how do we improve the products, how can we use the technology to improve the products so that people will want to buy the microinsurance products. So we'll discuss that later. Thank you.
Thank you. Let me invite our expert on agriculture. Pranav is the focal point for agriculture for the facility.
Thanks, Hara. Well, good afternoon, good evening, and good morning to everybody wherever you are listening in from. My teasers and insights over the next 5 minutes are essentially linked to all the other issues that you've heard so far in this afternoon, primarily because all these issues find their occurrence either as opportunities or as challenges in the agriculture sector. One of the biggest challenges in agriculture sector related to viability is though a lot of the target population of the microinsurance beneficiary target is connected to agriculture, but very few of them have the ability, knowledge, skills, or the awareness about what insurance can do to them. So while agriculture insurance is a very obvious need in the low-income households and the rural households in various parts of the world. This need doesn't necessarily convert into demand. So to create the demand, to create knowledge about the insurance, there is a huge requirement of the skills that we heard of. Awareness, education, how can we do that? That's a big challenge in the sector. The other big issue that people wanting to do agriculture insurance face are the operational issues. And operational issues can mean both in terms of actually reaching out to the customer, finding them, adverse selection. We heard questions on that earlier. We heard challenges on how fast we can settle claims. So though the farms are far, so obviously settlement times can also tend to get extended. To offer benefits across the entire value chain, it's not just the farmer who is impacted, but it's all the other various players in the sector who finally ensure that the agriculture produce reaches us that is affected. And this impacts both livestock as well as crop insurance issues. Livestock has other issues on identification, which also leads to how big does your portfolio need to be to it for it to actually become viable. You keep investing. What is the time to get returns from the sector? The size of the insurance package itself. So it's a small ticket size. How can you combine the small ticket size into large volumes to ensure that your price into number of policies sold give you a viable business proposition in the sense? We heard Craig mentioning the role of government in this sector, and for whatever reason, there seems to be an accentuated role for the government here, which can actually be done in a couple of ways. One, of course, promoting trust on insurance, because insurance, for whatever good or bad, is still at an understanding stage in the beneficiaries that we are looking at, and there's a huge issue of trust around it. So the government can help in facilitating and building this trust by adequate regulations that we talked of, setting standards, ensuring that the insurers follow a certain set of norms so that the beneficiaries do get the benefits in the quickest possible time. The other issue we heard was of government's ability to provide subsidies. Subsidies not only in form of directly reducing the premiums and directly supporting the premiums, but also subsidies in terms of providing incentives for incentives for players in the sector to enable them to do more effective functioning in the sector, whether it is in terms of creating awareness or providing an infrastructure of the government schools in the villages to do their enrollment, or providing the infrastructure in the village of the post offices to enable them to sell the insurance there or do promotional videos there. So the government can play a huge role as a facilitator in this sector. We heard Eric talking about technology and what it can do, and certainly it finds a huge resonance in all the various fields that we talked of. Besides awareness creation, which is of course huge, technology can actually help in providing relevant data for simplifying the products that we take out in the market, help in identification of the target assets, whether it is the crops or whether it is the livestock. By being available, it can also help in diversifying the number of distribution partners through whom agriculture insurance can be distributed. One of the growth factors mentioned initially was the diversity of players that are there in the sector. And agriculture, there is one definite sector where you have large number of new players in the market than just agents going and selling. You have seed distributors, you have fertilizer distributors, you have microfinance institutions themselves who are now actively supporting agriculture insurance in the market. The other great thing that technology can do is provide insurance plus services, We heard of value-added services in the health sector. There is a case for building up an entire ecosystem around agriculture insurance by providing other services in terms of agriculture advisory services, in terms of providing weather forecasting services, which can actually help and encourage more and more people to get into covering themselves through insurance. We'll just have a quick look at the crop insurance sector and the various mechanisms that have helped the sector in growing. We have automated weather stations that are being prominently used, and this is one of the new modifications and product diversification that we heard of initially, where this product is a relatively new product, where instead of actual indemnity and actual loss being assessed on the ground, these scientific equipment and data collected through these equipments on which an index has been created help in deciding the loss that can occur due to occurrence of a particular adverse weather event. And building up with the weather stations that started up, we now have satellite imaging data that is proactively being used in helping to cover a larger area, because as we heard Eric talking, creation of the weather stations does take time, it does take some costs. So can satellite data be used to actually provide information about larger areas and help in quicker realization of information that can actually be used not only in first creation of the product, but also in settling claims in the quickest possible way so that relief can be provided at the time of the occurrence. The livestock insurance scheme in Kenya that we heard Alfredo talking about uses this technology extensively in actually seeing the vegetative base and the grasslands available for cattle to feed on, and then creating an index as to calculate the livestock mortality and work accordingly. Parametric insurance, which can be done by these indices, can actually help in providing the first level of relief in terms of catastrophes, and the Foncose product that we heard Alfredo talks about does provide initial relief through the index insurance process, and then the greater catastrophe relief that the governments and the state government can look at. Moving on to livestock insurance, technology has found a good use in this sector by its ability to identify specific cattle that have been insured. Traditionally, that has been a challenge in this sector and has remained insurers have remained at a loose end in terms of certifying that they are actually paying out claims for the cattle whom they had actually insured. By use of radio frequency identification devices that are actually injected below the hide of the cattle, it can actually be tracked back that the claim on which the cattle on which the claim is being filed is the cattle that you actually insured in the beginning itself, and that has led to ability on part of the insurer to pay claims faster, because verification and approval process has become faster, customer satisfaction because it has led to no stress on the cattle itself, as well as rationalization of premiums. So we certainly believe that the use of all these various technologies, changing of these processes, use of government interventions are certainly opening up the agriculture insurance sector, and we feel that it's just the starting in the sector, and we can look for much larger numbers, and microinsurance can play a far greater role in covering the risks that the sector currently faces. More follows when we talk later. Thank you.
Thank you, Pranav. Next speaker is Michal Matul, the Senior Research Officer of the facility. He's also the co-editor of the second volume of the Microinsurance Compendium.
Thank you, Sarah. Good afternoon, everyone. I have a pleasure today to discuss with you client value from microinsurance. Let me start with a few questions. The first question is, questions to you, of course. The first question is, how many of you have an insurance policy? Please raise your hand. Okay, great. So this was expected. I'm just checking if you're still with us. The next question is a bit more tricky though. So how many of you ever had a claim that was higher than 20% of your monthly salary? Calculations. Okay. I'm raising my hand as well. Good. So among those who had such a claim, how many of you, when you claimed and you got the insurance payout, you felt, it's great that I'm insured? I did. Okay, great. You're an excellent audience. So you just helped me to define the most important element of the value of insurance. That's the financial value. Insurance covers catastrophic expenses. It's important for us here, but I think it's even more important for all low-income households in developing countries. As you notice, not everyone claims. So there's another important element of the value of microinsurance that some people call expected value. It's also quite important. It's quite well pictured by those pictures that you see on the slide. So when you go to developing countries, quite often you see traders selling the same products. Quite often it's potatoes. It's quite puzzling, but it's a very rational risk reduction strategy. So imagine what would happen if they were insured, if they were protected against various risks. Maybe they will have a better credit rating, so they will get access to cheaper credit. Maybe they will just decide, okay, I can do something else and differentiate from my neighbors. I will get involved in other activities. This peace of mind effect of microinsurance is not yet proven, but there's a hypothesis. If people are better protected, they should involve in higher risk, but also higher return economic activities. Another question. How many of you ever had a bad experience with insurance? Great. We like talking about those things, yeah? I think you're right. Bad insurance products exist, and there are even more bad insurance products in developing countries. So we at the facility, we strongly believe that there's a way to accelerate improvements to client value of microinsurance offerings. Let me discuss a few selected issues around client value of microinsurance by using an example from Kenya. Just need to pay attention because I'll ask you another question after I present those two products. So the first product is delivered by Jamii Bora Trust, an NGO that operates in Kenya, provides social services and runs a microcredit program for low-income households in Kenya. What they offer is these are two basic products that are in fact bundled with credit. So they're just available to microcredit borrowers of Jamii Bora. This is inpatient health and credit life product. We see that the inpatient cover is unlimited. They can avail health services in missionary hospitals in Kenya. The price for this cover is 2,400 Kenyan shillings. You just need to remove 2 zeros and you get euros. So it's around 24 euros per family per year. And it's delivered to quite a poor strata of the society. These are urban slum dwellers in Nairobi and other large cities in Kenya. This product is quite popular. They reach significant scale because it's mandatory. When you look at the claims ratio, you see that people really use this product. The second product, it's a bit more complex to present. It's provided by a cooperative insurance company. It's called Bima ya Jamii. They deliver it together with the National Hospital Insurance Fund in Kenya. So this is what they sell, in fact, is the cover that is available to formal sector through their contributions. So they sell this cover to the informal sector. This is an inpatient cover with some limits, as you can see on the slide, but it's still quite a good cover, though restricted to government hospitals. And CIC adds on the top of it a few other covers. This is hospital cash, accidental, and funeral cover. It's a bit more expensive, as you can see on the slide, and it's delivered through microfinance institutions and SACCOs. It's a standalone product, so it's not really bundled with other services. You will see that the scale is a bit lower. It's even lower today compared to the figures from 2010. But many people use this product. Many people claimed on this policy. When you look at those two products now, just think for a moment, which one do you think delivers better client value? I will let you think. It's not an easy question. So please raise your hands if you are for Jami Bora Trust product. I see a few hands. Okay. Great. Also my colleagues, that's great. What about the other product, the CIC insurance product? Who is for this one? Okay. There are also a few hands there. Who was undecided? It was difficult to decide. I will raise my hand as well. It's not so easy, in fact. And I think when you look at those two products, they both look really very good on the paper. But what we learned at the facility while working with more than 50 organizations in Africa, Asia, and Latin America, that client value is quite complex. So it's not so simple. So you need to have a very holistic approach to understand what's going on. So it's not just about the product and price. So that's why, together with our partners, we developed a tool that we call PACE, which stands for Product Access, Cost, and Experience. This is a tool to evaluate value from microinsurance offerings, and we compare microinsurance to other alternatives, and we try to see which products are better. So we look at the appropriateness, we look at accessibility, we look at affordability, we look at responsiveness, and we have quite many measures to come up with the final score. This funny diagram that you see on the slide is in fact the final score. And when you look at it, you see that Jami Bora and CIC, they score quite similarly in terms of product and cost. That is why, based on the descriptions that I provided on the previous slide, it's really very hard to decide which one is better. I think the devil is really in the details. So when you look at the graph, Jami Bora scores lower than CIC on access and experience dimensions. I don't have time to get into details now, but what this example illustrates quite well is that simplicity is key. At this stage of insurance markets developments in many developing countries, I think the simple products can provide quite good value. You will see that the CIC is providing a composite product, and it's really difficult to explain benefits to clients. It's difficult to make sure that it's accessible. It's difficult to manage claims. It's difficult to provide good customer care on those kind of services. The other issue that it's quite important when we discuss value or client value or business viability of microinsurance is the issue of mandatory products. We heard from Craig and a few other colleagues here that there is this evolution that we're moving from mandatory to more voluntary products, which is great. But you can see also from this example that those automated mandatory products, they can still provide reasonably good value to low-income households. So there is definitely something to be explored more about those products. But what's also interesting when you look at the evolution of products and the evolution of client value in microinsurance is that the more mature products provide better value. So we reviewed more than 15 products on different markets, and I think what came very strongly from our analysis is that the mature products just score consistently better on all the dimensions than those that are just been launched. So I think the message here, and I would like to leave you with this message, is that we just need to be a bit more patient. With the right support that providers can get at the local and international level, you can significantly accelerate client value of microinsurance. And hopefully one day, low-income households in developing countries will be so fortunate as we are, and they will have access to good insurance products. Thank you very much.
So, unfortunately, Brendan Matthew from Zurich Financial Services couldn't join us today, but he sent us a video. And I also want to highlight the fact that my colleague Peter Vrede will be able to answer your question, Peter. Peter is for the facility the focal point for business viability. So let me show you the video.
Hi, I'm Brandon Matthews, and together with Janice Angove and Martin Herrendorf, we wrote the chapter Teaching Elephants to Dance, the experiences of commercial insurers serving the low-income markets. Underlying commercial insurers' activities in these markets is a global demographic change. This change means that the way that insurance serves its role in society also needs to change, or rather, not how what it does, what its role is in society, but how it fulfills that role, in particular in how lower income and working poor in emerging markets will receive the benefits of insurance and access insurance products. So to explain that underlying demographic change, let's start with a video from Hans Rosling.
The main misconception is that the world still is as it was when I went to school. When I went to school, there were industrialized countries, or the West, 1 billion people. This symbolized 1 billion people. And then there were developing countries, 2 billion people, and they were far away. These were richer, those were poorer. During my lifetime, 3 billion people more has been added due to population growth. But they don't live here. They live here in the middle. And actually there's been economic growth here, so they've catched up. However, as you all know, there's a lot of people who still live in great poverty in war-torn countries like Somalia, Afghanistan, and Congo. So the distance between the poorest and the richest is actually wider than ever. And during the rest of my lifetime, if I will live until 100 years, 2050, 2 more billion will be added. And they will probably be here, Shanghai and the richer part of India and so on. Question is whether these poorest billion will have gained peace through internal democratic development and wise peacekeeping, and they are up here somewhere. This would be a very nice world to leave for my grandchildren. And you can see that the West will be a very little part. The West really has to integrate in the rest of the world. It will just be about 1/10 of the world.
So continuing with Rosling's Lego blocks, it's important to understand for the insurance industry that $3.6 trillion, nearly $3.7 trillion worth of the revenue produced by the industry is produced within these 1 billion people and the countries and the companies that are run within these nations. And another 600 billion is coming from these markets, and virtually nothing is coming from the very lowest income. So what this tells us is that this is an industry that knows an awful lot about where traditional assets are and with traditional customers, and has a lot of space to grow and a lot of innovation that's required in order to serve these markets. And this, as we discussed in the chapter, sets up a couple of interesting dynamics within a company, because those that are producing the $3.6 trillion worth of revenue certainly have a lot of very valuable expertise and important knowledge, science in fact. The entire actuarial science, a lot of that, of course, is focused on the insurance industry. But then there's a lot of new knowledge that is required. And for this, increasingly insurers are turning to new types of partners, of course microfinance institutions, but also mobile phone companies, in order to change the way that the products and services are being sold into these low-income markets and to better serve low-income customers. And we recommend 7 basic rules for doing this, and it starts with understanding the motivations that one's company has for doing the work, and also, of course, understanding what the customer needs. But I look forward very much to discussing with some of you in the breakout session. I'll be available for that, to discuss in detail how commercial insurers are fulfilling their role in society by serving the low-income markets.
So I think we're very late, but I think we should still take 5 minutes, 5-10 minutes for the Q&A with onliners. I would still propose maybe to change our plan. And as we've got a cocktail waiting for us, I would invite all of you after the Q&A. Maybe we could move there and we can go on with the discussion. We would bring the posters and we would have, the discussion there with a glass of wine or a beer. That would be nicer. So, Jasmine, do you have any question?
Yes, in fact, we do have several, but in the interest of time, again, we have to limit. Okay, so one is, this is for you, Pranav, from, where is that? From KZMD Mortuza Ali. It would be nice if Pranav elaborates how index-based weather insurance has developed so far in India and other parts of the world.
Well, the Indian story may not be the same as in other parts of the world, but two of the things that happened in India, one, of course, it started in very small when the World Bank, Swiss Re, and ICICI Lombard with Basics, the microfinance distributor, came together with 268 farmers insured in the first round of insurance when index insurance was sold. But gradually, over a period of time, two things happened. One, the use of privately operated weather stations became more frequent. As a result of which, instead of just using the 540 odd weather stations that the government meteorological department had, NCMSL, as we heard Eric mentioning, started putting up weather stations which enabled insurers to actually price risks and have the tracking of the risk on the ground level. The second important thing that happened, which was the primary driver in the scaling up of the index insurance processes, was the government's interest in index insurance. The government had traditionally insured the crops for all farmers who had taken loans who had taken loans for their crops. But they also included index insurance in providing subsidies and being eligible for those subsidies under that. And as more and more players kept coming into the market, besides just one government insurance company, more players combined with availability of freer, or should I say simpler, premium access, enabled the market to grow more and helped in development of trust in the customers. This was also helped by the fact that the claims, whichever were there, did get triggered in adverse events, and the companies were able to play claims which helped in development of trust. As a result of which, from 268 farmers, we have now over about 10 million farmers covered under index insurance in India.
Thank you. I'd like to read one more, and then maybe the rest of the questions we can just forward to the presenters during the small group discussions over some drinks. So this next question is from Atemkem Nakafu. This is for you, Michal, on client value. What are the key issues that one should focus on when trying to understand the demand for microinsurance? How can one contribute to building the culture of microinsurance in places with little or no awareness?
Great. So it's a very good question, in fact, and it's a difficult question to answer as well. And it's also getting late. So let me try to cut it short. It's true that demand is one of the most important challenges now for microinsurance providers. And we, at the facility, we are going through the strategic planning process now. And what we heard from practitioners and our other stakeholders, they recommended quite strongly for us to focus on this question in the next phase of the facility. So we're still considering it. So we might have more answers to these questions in the future. I think what's important in the demand analysis is that even if you sell a mass product, you need to be very, very clear about the target segment. It's not possible to design a product for all. So even if you have a mass product, it's really important to identify those core target segments, and then you can hopefully gather all those insights to develop specific solutions for this group. In terms of questions we need to ask many questions, in fact. Of course, we need to understand risks, how people cope with risks, what kind of tools they use to manage risks. But it's also what's quite important that we need to understand their lives. So we need to understand the context in which they live, we need to understand their lifestyle, we need to understand their spending patterns, so we need to understand many things. It's important to understand that we competing with other products and services for the same budget. So we're competing with telecoms and fast consumer moving goods companies. It's not just we competing with each other. So that's why it's very important to understand how poor people make economic decisions. We also need to understand their financial behaviors, and in fact there is and all the behavioral constraints around financial behaviors. I think we all intend to insure ourselves, we all intend to save, but quite often we fail to do it. So I think it's very important to understand those behavioral constraints, and there's a very good chapter, in fact, in the second volume of the Microinsurance Compendium, drafted by Jonathan Morduk and Aparna Dalal, exactly on behavioral constraints. And last but not least, we need to understand the obstacles that people face to buy insurance. At the end of the day, we run market research not to collect data for actuaries. We run market research to understand why people are not buying. What are the obstacles? And it's not just about their budget. There may be many, many things in the value chain, in fact, that will inhibit them to buy insurance. And just not to forget the first volume of the Microinsurance Compendium, there's a very good chapter on demand in the first volume as well, and there are guidelines for demand analysis for microinsurance that were developed by Microfinance Opportunities. Thanks.
Thank you.
So let me thank all the speakers for this great wealth of knowledge. Let me thank you for your participation, both on-site and online. And now let me invite you to pursue the discussion with the drinks. Thank you, Jasmine, also.